Hey Joe, how you doing?
I'm good, Ken. I'm good. I am missing the sun, I've got to say. It's been cloudy, hasn't it? But yeah. How are you doing?
Yeah, blessed, mate. I know. It's disappeared for a little while. Do you know what? What a cliche for any Americans watching us. They must think, man, what a cliche. These British guys always talking about the weather.
Yeah, literally.
So
We're
true, so
obsessed with it, aren't we?
stereotypical. Oh man, but no, it's true, man. One thing actually, before we get into this, we had like a fair few like decent bits of feedback, like a couple of people saying, how they just look forward to these podcasts now, which is nice, because at the end of the day, we're just speaking about what we enjoy, what's going on, and it's nice to see people taking away some value from these.
Yeah. No, it's a nice discussion to kind of round up the week as well for us, isn't it? Because we just list off the main points we want to talk about it, and then we just go through it.
I know, and it's good to come back to it because it's literally everything happens in a blink, and it's just like it's nice to refer back to see what happened, for ourselves as well. So, man, let's go with the changing theme that we're starting to see now. Real changing theme. All these like safe havens are gathering some massive ground, like JPY went on a massive run, CHF, and dollars staging a good rebound here. Looks like we could be in for some chunky reversals even for next week. Like, what's your take on this?
Yeah, so I did a blog on this yesterday, and it was titled "Why This Stock Market Sell-Off Might Be Different." But it doesn't just go for the stock market; it goes for all risk assets, and it goes for havens. Could be supported from now on as well. And basically, the crux of it is, in the last couple of days, there's been increasing evidence of a second wave of coronavirus cases in the US, and that has been really, really spooking markets because one of the key themes that underlie this big risk asset recovery that we've seen since March was the fact that coronavirus cases were like dropping in the US and Europe and UK and stuff. True. So now if coronavirus cases keep heading in the wrong direction, we'll definitely see more downside in all these risk assets, I think.
Because I think it's a tricky one. It's a tricky one because sorry, I'm a bit lost for words. Okay, that's what I was gonna say. Obviously, we're trying to get these economies rolling again, and everyone's sort of opening up the economy because obviously early in the week, that's what I was going to say, the WHO, the World Health Organization, they said early in the week how, yes, we've seen improvements in Europe, but cases are still rising, like globally, like in the Brazil and the US. And they actually reported that we had our worst daily diagnosed cases since the pandemic began, the worst daily number.
Wow.
I know. And now it's just like, that's what I was going to say. What do we do? Because UK and Europe are easing, borders gradually through this month and July. But then if this second wave comes back, then surely we're going to have to start bringing it back in again. It's like, oh, God, man.
Dude, I know. I mean, that's the fear, isn't it? It's like that exact feeling that we've got right now about that is the reason markets sold off, I think, on this kind of theme.
God,
it's not good, man. It's not good. We're not going to be able to reopen flights to the rest of the world for a while, I think, if like Brazil's really bad and stuff.
It's true. True. Agreed. So obviously, as you say, we're seeing those safe haven flows, and look, the US is just the start again. If this starts going back globally, as we were just saying, then that safe haven flow is just going to continue to pick up right now. And you got to think as well, just quickly, obviously, yes, we've got our fundamental excuse for this, but something that we are noting anyway, it made sense to see a technical correction. We had like 3 solid weeks of this risk appetite. It's hard, stocks, oil, Aussie, Kiwi. It only makes sense to come back now anyway.
Yeah, agreed. I mean, a lot of people were saying we were getting to like overbought conditions. So, definitely a healthy correction, if you want to call it that.
Indeed, yeah. And then one thing I guess that ties in with things that we could go on to is the FOMC this week, right? The FOMC rate decision, which I guess we can tie it in a little bit with a change in the trend and change in momentum, because for me, obviously, they didn't do really anything outside of expectations. I think one of the things that let down the markets was the fact that they could have introduced this yield curve control, obviously effectively trying to intervene to keep borrowing costs low, right? Essentially, that's the sort of the goal of it.
Exactly, yeah.
So what's your sort of take on that, do you think?
Yeah, I completely agree. I mean, they came across as really dovish, as expected. Powell was really keen to reiterate that he's still quite pessimistic on the outlook, and as a result, he's still keen to use all the tools that the Fed has, to support the economy and stuff. But like you say, they weren't as trigger happy on this yield curve control thing as I think a lot of people hoped they would have been. Because I think the thinking going into the meeting was that they were going to be, the FOMC were going to be discussing how they're going to do yield curve control. But actually what it seems to have been is the FOMC, they're not even convinced yet if they should do yield curve control, which I think markets were a bit disappointed with the fact that they're not set on yield curve control.
Exactly. That could have really helped on stocks with this pullback as well, you know, because at the end of the day, so it could have been more dovish. It could have been. I mean, they were dovish, but they could have done more. Still, markets always want more. When we've priced something in, they need more, right? So that's
true.
that. And look, obviously, I think I mentioned this a couple of weeks ago, or maybe in last week's blog, but I mentioned it again when I was rounding off the dollar in the latest blog on Friday today, and just saying how, look, maybe this is a good turning point for the dollar. Like, you know, back when FOMC introduced QE for the first time in the 2008-2009 crisis, obviously, yes, we had a pullback for the dollar because of their flooding the market with dollars. But then markets were encouraged that the Fed are just going to do absolutely everything it takes to try and keep the economy going. So maybe now we start seeing that reversal for the dollar of, you know, assurance from the Fed that it has the reverse effect rather than being negative for the dollar, if that makes sense. No,
definitely could be, especially if in the next couple of months we see the US economy do better than like the Eurozone economy or the UK economy. Like this, I guess this kind of brings us on to the next point you wanted to talk about, UK GDP. Oh my goodness me, it's so bad, wasn't it? Yeah, literally.
Man, do you know what as well? Yeah, so obviously you're saying that's the worst. That's 3 times worse than what we had in the financial crisis. That 3 times worse. Man, like, you know what's crazy? Like, when I think about this situation, this COVID-19 situation on the economy, I understand how much damage it's had, you know, of seeing loads of people at work. But where I'm kind of in my own shell, my own bubble here with the Freak Network, I didn't realise the severity that it's 3 times as worse than financial crisis. This SHIT is really bad, man. Like, wow.
It's really bad. Like, we're so lucky that we work in an industry, like trading and markets actually kind of does well in this kind of environment, doesn't it? Whereas, oh man, if you're a waitress or waiter or manager at a restaurant or bar or something, oh God, it's terrible, isn't it? Because who knows when they're going to be back to work?
Exactly, that's the thing. It's so crippling, man. So much uncertainty. And and look, a couple of things actually. Does this now increase the case? Because there's been floating around the idea with the Bank of England potentially that they have to do more. Surely they have to do more now. They've got to start considering those negative rates, because that's the next move, right?
It is. Well, the most immediate move, because we've got a Bank of England meeting next week. The most immediate move, they're just going to do more QE. Pretty much everyone expects about, I think, 100 billion in additional QE, just so they can keep their purchases going at the current rate. But yeah, like you say, in the months after that, maybe in August or September, they're going to have to start thinking whether they actually want to do these negative rates or not.
True.
Because at the moment, they're kind of weighing it up, I think. So I mean, like you say, it's definitely on the table.
Yeah, it's on the table. I think everyone, traders will be listening very carefully then to the statement. You know, if there is any talk or mention of those negative rates being an option, then perhaps GBP could sell off on that. I mean, we're already in a bear market now anyway, reversing, but yeah, perhaps. And you know what's annoying? Like, definitely. The thing is, with the UK, I'm not surprised. I was saying that I'm not surprised at how bad that GDP number was, because, man, Boris was just so late with everything. We were late with everything. Like, and it's frustrating because, you know, we're the last, like, if you want to travel as well, I know this isn't a massive priority, but, you know, if you want to travel, we're the last country that any other country is going to consider because of how late we were at responding. Like, everywhere I'm looking at the moment, like, if I want to go to Bali, I want to go to Dubai, like, UK is like just last on the list for everyone. No one wants us,
dude. I know. I know, it's so bad. And do you know what, I saw this really interesting article. It was about a week ago. I can't remember like what it was called or who wrote it, but it said that if we had done our lockdown 1 week earlier, total coronavirus deaths would have been half, probably. Well, that was what their research showed. Wow. And that's just 1 week earlier, man. It's like, why did we wait?
I know.
Why did we wait another week?
Literally.
It's just shambolic.
It is in a way. But it is what it is. So, okay. Now, obviously we've got a busy one next week. What are we looking at, dude? Bank of England, you've said.
Yeah, I mean, yeah, we already spoke up Bank of England. We've got Bank of Japan. Probably going to be boring, to be honest, because they've done everything they can. What else we got? A lot of data. So there's a big batch of UK data, so labour market data, CPI, retail sales, industrial production. We've got quite a bit of Aussie data as well, so I think retail sales and labour market data, and then a bit of Canadian data as well. Mm-hmm. Another retail sales, and then inflation. And yeah, that's pretty much it. I don't think there's much on the US front, to be honest.
Okay.
In terms of data or anything.
And then, obviously, with themes, it's calmed down a little bit at the moment, hasn't it? For now, US and China. For now.
Yeah.
But it could.
But we'll keep an eye out.
Yeah, we'll keep an eye out. Outside of US China, I think something you mentioned to the members actually is worth keeping an eye on. I guess with US North Korea, maybe that bubbling as well, perhaps.
Yeah, definitely. Like, I mean, Kim was talking about severing his relationship with Trump completely.
Exactly.
So, yeah, not good.
Not good at all. So, yeah, man, still plenty to talk about, dude. Well, look, another good week, man. Have a good weekend.
Yeah, as ever, you as well. Cheers,
bro.
mate.
Stay lit, baby. Let's get it.